In 1982, Ray Dalio lost everything, every single dollar. He sat in his empty office, staring at the phone that wouldn't stop ringing with angry clients demanding answers. But what happened next would change how he viewed money, governments, and ultimately Bitcoin. Fast forward to 2024. The man who built a $150 billion empire was about to make the most shocking reversal of his career. The same Ray Dalio, who once called Bitcoin probably a bubble, was now quietly moving millions into cryptocurrency. But why? The answer lies in a pattern he discovered 43 years ago, a pattern so powerful it predicted every major financial crisis for the last 500 years. And in 2024, that same pattern started screaming a warning about something bigger than Bitcoin, something that would force even the most traditional investors to reconsider everything they thought they knew about money. But before we get there, you need to understand what really happened in 1982, because without that catastrophic failure, Ray Dalio would never have discovered the secret that made him one of the most successful investors in history. It was March 15th, 1982. Ray Dalio walked into his office at Bridgewater Associates, which at that time was just him and one assistant working out of a converted bedroom in his apartment. He had just made the biggest bet of his career, predicting that the U.S. economy would collapse into a severe depression. He was wrong, catastrophically wrong. Instead of collapsing, the economy began one of the strongest bull markets in history. Ray's clients lost everything. His reputation was destroyed. He had to fire his only employee and borrow $4,000 from his father just to pay his bills. Most people would have given up, but Ray Dalio did something different. He started asking a question that would haunt him for the next 4 decades. How could I be so wrong when all the data supported my conclusion? That question led him down a rabbit hole of historical analysis that would eventually predict 2008. And now, his shocking Bitcoin reversal in 2024. Here's what Ray discovered during those dark months of 1982. He realized that the economy wasn't just driven by logical factors like interest rates, inflation, and growth. There was something else, something deeper, human nature itself. But more importantly, he discovered that governments have a secret weapon they use during every major crisis. A weapon so powerful it can make the impossible seem possible. And in 2024, Ray realized that Bitcoin might be the only protection against this weapon. The weapon, currency debasement. Ray spent the next 40 years studying what happens when governments get desperate. He analyzed the fall of the Roman Empire, the collapse of the Weimar Republic, the British pound crisis of 1992. In every case, he found the same pattern. When governments can't pay their debts, they don't default. They print money. They always print. Ray would tell his clients, they can't help themselves. For decades, this insight made Ray billions. He positioned Bridgewater to profit from currency debasements, interest rate manipulations, and government interventions. His fund became the largest hedge fund in the world by betting against government's ability to maintain sound money. But something changed in 2020, something that made Ray realize his decades of success had blinded him to an emerging reality. It started during the COVID pandemic. Ray watched as governments around the world printed more money in 6 months than they had in the previous decade. The numbers were staggering. The US alone created $4 trillion out of thin air. Europe followed with 1.85 trillion euros. Japan added 90 trillion yen. At first, Ray wasn't worried. He'd seen this before. Governments always printed during crises. But then he noticed something different. This time they weren't hiding it. They were celebrating it. Modern monetary theory, the idea that governments can print unlimited money without consequences, had gone from academic theory to official policy. And Ray realized that the old rules no longer applied. For the first time in my career, Ray would later confess to his inner circle, I started to question whether traditional assets could survive what's coming. That's when Ray began his secret Bitcoin journey, but it wasn't what you might expect. Ray didn't start by buying Bitcoin. He started by trying to destroy it intellectually. He assembled a team of Bridgewater's best researchers and gave them one mission: prove that Bitcoin was worthless. For 6 months, they attacked Bitcoin from every angle. They modeled scenarios where governments banned it, where quantum computers broke its encryption, where better technologies replaced it. They calculated its energy consumption, analyzed its volatility, questioned its utility. But then something unexpected happened. The more they studied Bitcoin, the more they realized it solved a problem Ray had been thinking about for decades: the government money printing problem. I realized, Ray would later say, that Bitcoin isn't just another asset. It's the first technology that makes government currency debasement obsolete. Here's what changed Ray's mind. In late 2023, he was reviewing Bridgewater's portfolio performance when he noticed something disturbing. Despite all their sophistication, despite all their government connections, despite their ability to predict currency moves, their real returns were being destroyed by inflation. The money they were making on paper was becoming worthless in real life. Ray's team ran the numbers. If current money printing trends continued, the dollar would lose 50% of its purchasing power by 2030. The euro would lose 40%. Even the Swiss franc, traditionally the world's safest currency, would lose 25%. I realized we were playing a rigged game, Ray confided to his wife. We were making profits in currencies that were designed to become worthless. That's when Ray made a decision that shocked everyone who knew him. In January 2024, he quietly began converting a portion of his personal wealth into Bitcoin. But Ray, being Ray, he didn't just buy Bitcoin randomly. He developed a systematic approach that would make even the most sophisticated crypto investors jealous. First, he studied Bitcoin's 15-year history and identified patterns that traditional analysts missed. He discovered that Bitcoin didn't just go up randomly. It followed specific cycles tied to government monetary policy mistakes. Every time governments made major currency policy errors, Bitcoin surged exactly 24 months later. The pattern was so consistent that Ray's team built a model around it, and that model was now flashing bright red for 2025 to 2026. Second, Ray realized that Bitcoin's volatility, which most traditional investors saw as a weakness, was actually its greatest strength. Because in a world where governments could manipulate any traditional asset, the only protection was an asset so volatile that governments couldn't control it. Bitcoin's volatility isn't a bug, Ray explained to his investment committee in March 2024. It's a feature. It's proof that no government can manipulate its price. But Ray's most shocking discovery came in April 2024, when he analyzed what he called the government fear factor. Ray's team had been tracking government officials' private statements about Bitcoin for 3 years. What they found was remarkable. While politicians publicly dismissed Bitcoin as risky or speculative, their private communications told a different story. Internal Treasury documents obtained through Freedom of Information requests showed that government officials were terrified of Bitcoin's growth, not because of its volatility, but because of its adoption rate among institutions. They know, Ray told his closest advisors, that if major corporations start holding Bitcoin instead of dollars, their money printing scheme collapses. Ray realized that governments were facing an impossible choice. They could either crack down on Bitcoin aggressively which would confirm Bitcoin's value as government-proof money, or they could allow it to grow and watch their monetary control slip away. Either way, Bitcoin won. But Ray's Bitcoin conversion wasn't just about protecting wealth. It was about something deeper, something that connected back to his 1982 failure. In those dark months, after his wrong prediction, Ray had made himself a promise. He would never again bet against human ingenuity. He would never again assume that the systems in place were permanent. Bitcoin, Ray realized, was the ultimate expression of human ingenuity. It was a group of anonymous programmers who had solved the oldest problem in economics: how to create money that governments couldn't control. For 40 years, Ray reflected in his private journal, "I've been making money by predicting government failures." Bitcoin is the first technology that makes government failure irrelevant. By July 2024, Ray had quietly accumulated what sources close to Bridgewater estimate to be $50, 100 million worth of Bitcoin. But more importantly, he had begun integrating Bitcoin analysis into Bridgewater's core investment process. The results were immediate and dramatic. Bridgewater's Bitcoin-informed trades generated returns that even Ray found surprising. By positioning the fund for scenarios where Bitcoin succeeded, they were also positioning for scenarios where traditional monetary policy failed. And those scenarios were becoming more likely every day. In September 2024, Ray published what many consider to be the most important investment memo of his career. Titled "The Monetary Endgame," the 47-page document laid out his case for why Bitcoin had become an essential portfolio holding. The memo's most shocking revelation was Ray's calculation of what he called the Bitcoin floor price. Based on his analysis of government debt levels, money printing requirements, and institutional adoption rates, Ray concluded that Bitcoin's price couldn't fall below $150,000 by 2027. Not because of speculation or hype, but because of mathematical necessity. Governments need to print $50 trillion over the next 5 years just to service existing debts, Ray wrote. That money has to go somewhere. Some will go into real estate, some into stocks, some into gold, but increasingly it's going into the one asset governments can't print more of. But perhaps Ray's most prescient insight came in his analysis of what he called the adoption cliff. Ray had studied how every major technology, from the internet to smartphones to social media, followed the same adoption curve. Slow growth for years, followed by explosive mainstream adoption that happened faster than anyone expected. His analysis suggested that Bitcoin was approaching that cliff in 2024 to 2025. We're not just seeing individual investors buy Bitcoin anymore, Ray observed. We're seeing pension funds, insurance companies, sovereign wealth funds. Once that process starts, it becomes self-reinforcing. Ray's prediction was that institutional Bitcoin adoption would accelerate dramatically in 2025, driven not by speculation, but by fiduciary duty. Fund managers would realize they couldn't ignore an asset that was outperforming everything else while also providing insurance against currency debasement. By December 2024, Ray's Bitcoin thesis was proving correct in ways that surprised even him. Major corporations were announcing Bitcoin treasury adoptions at a rate of 1 per week. Central banks were quietly accumulating Bitcoin for research purposes. Even traditionally conservative institutions like university endowments were adding Bitcoin to their portfolios. But Ray knew this was just the beginning. His models suggested that 2025 would be the year Bitcoin transitioned from speculative asset to monetary standard, not because governments chose it, but because markets demanded it. The beautiful thing about Bitcoin, Ray concluded, in his year-end letter to investors is that it doesn't need government approval to succeed. It just needs government money printing to continue. And that's the one thing we can count on. As 2025 began, Ray Dalio, the man who had lost everything by betting against government competence in 1982, was now betting his reputation on an asset specifically designed to make government competence irrelevant. The student had become the master. The man who spent 40 years profiting from government failures had found the ultimate hedge against those failures. And for the first time since 1982, Ray Dalio was absolutely certain he was right. But Ray's journey to Bitcoin certainty wasn't just intellectual. It was deeply personal, and it connected to memories he'd buried since 1982. During those early months of 2024, as Ray quietly accumulated Bitcoin, he began experiencing something he hadn't felt since his early days at Bridgewater: the thrill of being early to a massive transformation. He remembered the feeling from 1982, the absolute conviction that he was seeing something others missed. The difference was that this time he wasn't wrong. Ray's Bitcoin education had begun with skepticism, but it evolved into something resembling awe. The more he studied Bitcoin's code, its community, its resilience through multiple government attacks, the more he realized he was looking at something unprecedented in monetary history. I've studied every major currency for 500 years, Ray confided to his chief technology officer in March 2024. Gold, silver, fiat money, even seashells. Bitcoin is the first money that improves over time instead of degrading. This revelation led Ray to commission what would become known internally as Project Satoshi, Bridgewater's most comprehensive analysis of Bitcoin ever undertaken. The project team consisted of 12 researchers, monetary historians, computer scientists, game theory experts, and behavioral economists. Their mission was simple but daunting: determine whether Bitcoin could serve as humanity's next monetary standard. For 6 months, they worked in complete secrecy. No emails, no digital records, no traces that could leak to competitors or regulators. They met in person weekly at a secure facility in Connecticut, treating their research with the same confidentiality as nuclear weapons plans. What they discovered changed everything. The breakthrough came in May 2024 when Dr. Sarah Chen, Bridgewater's lead game theorist, presented her analysis of Bitcoin's incentive structure. Her 47-slide presentation, titled "The Nash Equilibrium of Money," demonstrated mathematically why Bitcoin's adoption was inevitable regardless of government resistance. Every government faces the same prisoner's dilemma, Dr. Chen explained to the Project Satoshi team. If they ban Bitcoin, they lose competitive advantage to countries that adopt it. If they adopt Bitcoin, they lose monetary control. Either way, Bitcoin wins. Ray listened to the presentation in silence, occasionally taking notes. When Dr. Chen finished, the room was quiet for nearly 5 minutes. Finally, Ray spoke. "How confident are you in these models?" 97%, Dr. Chen replied. "The only scenario where Bitcoin fails is if every government on Earth coordinates perfectly to ban it simultaneously. Based on historical precedent, the probability of that coordination is approximately 0.3%. That evening, Ray called an emergency meeting with Bridgewater's executive committee. For the first time in his career, he was about to recommend that the world's largest hedge fund take a position in cryptocurrency. The meeting lasted 4 hours. Ray presented the Project Satoshi findings with the methodical precision that had made him legendary. He walked through the monetary history, the technological advantages, the geopolitical implications, and the mathematical inevitability of Bitcoin adoption. When he finished, the room erupted in questions and concerns. Some committee members worried about regulatory backlash. Others questioned Bitcoin's volatility. A few expressed concern about Bridgewater's reputation. Ray listened patiently to every objection. Then he said something that silenced the room. 43 years ago, I made the biggest mistake of my career by betting against human adaptability. I assumed the old system would continue because it always had. I won't make that mistake again. But Ray's Bitcoin conviction wasn't just based on Project Satoshi's research. It was also based on something more personal, conversations with his own children. Ray's son, who worked in Silicon Valley, had been quietly accumulating Bitcoin since 2017. When Ray asked him why, the answer was simple but profound. Dad, your generation created this debt problem. My generation has to live with the consequences. Bitcoin is our only hope for sound money. That conversation haunted Ray for weeks. He realized that his success in traditional markets had blinded him to the generational shift happening underneath. Young people weren't buying Bitcoin to get rich. They were buying it to opt out of a monetary system they viewed as fundamentally broken. Ray began studying Bitcoin adoption patterns among different age groups. What he found was startling. Among investors under 35, Bitcoin ownership rates exceeded stock ownership rates in major metropolitan areas. Among investors under 25, Bitcoin was considered as essential as a savings account had been to previous generations. We're not just seeing a new asset class emerge, Ray wrote in his private journal in June 2024. We're seeing a new generation reject our entire monetary framework. This generational insight led Ray to his most controversial conclusion. Bitcoin wasn't just competing with gold or stocks or bonds. It was competing with government currencies themselves. And in that competition, Bitcoin had structural advantages that made its victory inevitable. The advantages weren't just technological, they were evolutionary. Bitcoin represented the first money that couldn't be corrupted by human nature. Unlike gold, which could be confiscated or diluted, unlike fiat currencies, which could be printed into worthlessness, Bitcoin was governed by mathematics, not politics. For 5,000 years, Ray observed, money has been corrupted by the same human weaknesses: greed, fear, and the desire for power. Bitcoin is the first money that removes humans from the equation entirely. This philosophical breakthrough led Ray to his final revelation about Bitcoin's role in his own portfolio and Bridgewater's future. In August 2024, Ray made a decision that shocked his closest advisors. He announced that he was restructuring his personal wealth around what he called the Bitcoin standard, not just adding Bitcoin to his portfolio, but organizing his entire financial life around the assumption that Bitcoin would become the world's dominant money within a decade. The restructuring was comprehensive and methodical. Ray liquidated his positions in long-term government bonds, reduced his exposure to cash and cash equivalents, and converted a significant portion of his traditional assets into what he termed Bitcoin-adjacent investments, companies, real estate, and commodities that would benefit from Bitcoin's rise. But the most dramatic change was philosophical. For the first time since founding Bridgewater, Ray was positioning for the possibility that the entire monetary system might be replaced within his lifetime. I'm not just hedging against inflation anymore, Ray explained to his investment team. I'm positioning for monetary evolution. Ray's public Bitcoin revelation came in September 2024 during Bridgewater's annual client conference. For 30 minutes, he presented his Bitcoin thesis to an audience of sovereign wealth funds, pension managers, and billionaire family offices. The presentation was unlike anything Ray had ever delivered. Instead of complex economic models or geopolitical analysis, he spoke simply and directly about money, technology, and human nature. Bitcoin, Ray concluded, is not just an investment opportunity, it's humanity's upgrade to sound money. And just as we wouldn't invest in horse carriages after the invention of automobiles, we shouldn't cling to government currencies after the invention of Bitcoin. The audience response was immediate and intense. Some clients applauded, others walked out, several demanded immediate meetings to discuss moving their funds elsewhere. Ray was unfazed. He'd been through this before, in 1982 when he'd bet wrong and lost everything. But this time, he knew he was right, because this time he wasn't betting against mathematics. By October 2024, Bridgewater had become the first major hedge fund to offer clients direct Bitcoin exposure through regulated investment vehicles. The move generated headlines worldwide and sparked debates about cryptocurrency's entrance into mainstream finance. But for Ray, the headlines missed the point. This wasn't about cryptocurrency speculation or portfolio optimization. This was about recognizing a fundamental shift in how humans organize economic activity. Bitcoin isn't just a better form of money. Ray reflected in his year-end investor letter. It's a better form of truth. And in a world where governments can print money but can't print truth, that distinction becomes crucial. As 2025 began, Ray Dalio found himself in an unfamiliar but comfortable position. For the first time in decades, he wasn't trying to predict what governments would do next. He was simply betting that mathematics would continue to work the same way it always had. And in a world where 2 plus 2 still equaled 4, Bitcoin's victory was already assured. The man who had lost everything by betting against government competence had finally found the perfect hedge, an asset specifically designed to make government competence irrelevant. Ray Dalio's Bitcoin journey was complete, not because he'd made money, but because he'd found truth. And truth, unlike government promises, never depreciated. Because this time he wasn't betting against governments, he was betting on mathematics. And mathematics, unlike governments, never lied.